So here we are again on EUR/USD. Yeah, so price recently has been very bullish, but this was a very strong move to the downside, trading inside the daily fair value gap, a bearish fair value gap. So you might expect some reaction from price based off that. And also if you look at the 4-hour, what do we have? To me, what I noticed is that we have a original consolidation, and price obviously stays lower, and now price is trading higher, and also price made a swing high, and price is now has touched into this discount bullish fair value gap right there. But on the other side, we have this bearish fair value gap, and this is an interesting one. This is the 4-hour bearish fair value gap where price reacted from, accompanied with this order block. So this makes this a strong resistance area. So let's go to the 15-minute. So there are a few things that I want to take into my trading, which I've written down right here. I call them a toolbox. I want to pay attention more to opening prices, to market structure, and obviously dealing ranges is already in my toolbox. So I added a few more. So if we look at Asia and the overnight, that was consolidating, and at the start of London was also consolidating, then one push higher into the bearish fair value gap, and as you can see, price traded away from the fair value gap since then. So let's look at the 1 minute time frame. So obviously nothing spectacular is happening here. Yeah, we do have this whole set of buy side liquidity, which got taken out, for example, right here. There's a sweep, but there is no displacement, so there's no trade. Same story here. There's no really displacement, no fair value gaps you could base your trades off. Maybe this one, maybe you took this one, could be not too bad, but yeah, then you take a loss, and there's nothing wrong with taking a loss. Then afterwards, price shoots into the bearish fair value gap on the 4-hour, and now you got displacement. You got your market structure break, you got displacement, you are in a bearish fair value gap from the daily, from the 4-hour. So it makes totally sense to short from this area right here. And of course you can think by yourself that this is a fake move. Then you could have waited, nothing wrong with that. And then you could trade lower another moment. So for example, if we look at the 15-minute again, and we look at this move right here, there is this move. There's this bearish fair value gap sitting right there and run there, because we now took out this low right there with speed. So that is a clear signal that there's a shift in market structure on the 15-minute. So I would use this fair value gap. Why? Because if I measure this move from this high to this low, this is the one sitting closest to the 50% area. And also it lines up more with the breaker. So this is one area we could look at for for taking a short. So this the first area, and the second area is when you see this happen, this low, this high to this low. And same story, I would have looked at this fair value gap, because there's also this breaker right here. So there's a breaker here for me, and there's a breaker sitting right here, aligning with the 50%. So somewhere in this area, or this fair value gap has my interest. And as for about targets, always choose your target up front. We are, for me, this is the current dealing range we are now in, or maybe you want to include this one too. But I was using this because this is really the move that is the origin for this whole push. So there's 50% right there, and there's this low just below the 50% mark. So that would be my target. And there's another, if you just want to use for value gaps, there's this one right here, where price eventually traded into, but you never know that up front, of course. But there's also a bunch of equal lows, so that's also a target. But I'm using the low-hanging fruit target, which is this low right here, accompanied with a bunch of order blocks. So we know our areas of interest, being the first one, this value gap, second one, that's value gap. So why? Because we touched the 4-hour bearish value gap and we drove away with speed. Also, if we look at market structure, what we have a short-term high right here, and we have a short-term high right there, making this a intermediate term high, which is a very strong high, of course. And don't forget, we are on the 15-minute time frame, and price displaces away right here, and also we have a shift in market structure right there. So yeah, it was a very nice sign that price was indeed bearish. So on the 1 minute, what we have this 50-minute bearish value gap. Of course, you could go short here if you're very convincing. This was big displacement. We had this low broken, we have displacement, we have value gap. So from here you could go short. And here we have some lethargic price action, but still price left this bearish value gap. Price trades into it, and here we got speed again. So this would be your entry right here, but you would never get filled. So that can happen. Here's the low, so we use the first value gap resting like there. Something like this. Maybe you stop here, or the rejection block. There's a use rig, so you can use that as a rejection block. And then your target that low. And as you can see, that would be a nice trade. You have to sit out the entire New York session, but in the end you would have made your trade. So that one we had. Then if that was not enough, then we have this fair value gap, which was created in here. Price trades away, price came back into the fair value gap. So what do we need? We need displacement and a market structure shift. So where's the low? No low is broken. This is not low broken, all those lows. So now we are creating a bunch of equal lows resting right there. And here we get displacement, this leg, leaving a very nice fair value gap. And with a very strong close below, taking out these lows. Then price goes up very slowly. That's exactly what you want to see. So entry here, stop loss there. Could also put your stop loss there, but then but I like to play it more safe. So for there, and then you could for the 1-to-1 go there, or maybe if you enter here, you probably go just for the fixed 1-to-2. I personally don't like that, but yeah, that would also be played out. Maybe I would have chosen another PD array as my target and manage it very aggressively. So maybe I would have chosen, in this case, this fair value gap right there. And maybe at the top of this, or maybe just a consequent encroachment, or just 1-to-2 and leave it in the upper portion of the fair value gap. So anyways, that would be a very nice entry and trade as well. Yeah, so I think that's about it. This safe to short here because you got market structure at your side. And bearish and order flow obviously has been shifted to bearish on the 15-minute by this time. So in short, yes, there were nice shortening opportunities today. So let's see what tomorrow brings us. And yeah, speak to you then. Bye.